Buying your first home can be one of the most exciting and frustrating times of your life. So imagine what happens if you've saved a deposit and instead of putting it towards your first home, you decide that there's so many issues in the property market for first-time buyers, you're going to be part of the solution instead. Meet co-founder and CEO of Gen H, Will Rice, who I'm going to be interviewing today on the Mortgage Mum podcast. I am desperate to find out the behind the scenes of this story of two first-time buyers, Will and Sophia, who decided to put their deposit into building their own lender instead of buying their first property. So, Will, I've been so excited to have this conversation with you. So from trying to buy your first home to setting up a lender, what happened?
Well, Sarah, thank you very much for having me on the podcast.
You're very welcome.
I started the process of looking to buy a home having been living abroad for quite a while. So my wife and I had been outside of the UK. We came back in 2018 and we were both 30 years old.
Okay.
Through our 20s, we've been able to avoid the challenges that first-time buyers in the UK face, ignore them, pretend it didn't affect us. We weren't in the UK, and so we didn't need to worry about putting down roots and buying a property. So after hiding from the problem for a long time, we came back to the UK and were just stunned really by what had happened to house prices while we'd been away. Right. How unaffordable it was. We were lucky to have a decent income and good jobs, and we still didn't feel that we were in a position to buy a home. And so rather than putting down the savings that we did have into a deposit for a first home, we started exploring, is there a way that we could make it easier? Is there a way that we could deliver better solutions to first-time buyers to help them buy a first home? That started a process that really happened accidentally and cascaded from there over the course of several months, maybe 6 to 12 months, where we slowly toyed with this idea and really accidentally fell into the process of starting a business instead of buying a property.
Have you always been an entrepreneur? Because that is quite a unique mindset shift.
Not at all. And I still don't really self-identify as an entrepreneur.
Really?
And I found it, when we began a business, quite hard actually to get into the mindset of other founders that I was seeing, other entrepreneurs, because so many entrepreneurs have that drive to create businesses and some of them to do it for its own sake. I met a lot of early stage entrepreneurs when I was getting started who had lists of ideas. They were looking for ideas and they were trying to work out, of these 100 things that I've conceived, which one is going to be the best business for me to start. Whereas for me, the process was completely the other way around. It was thinking deeply about one issue and a problem that really bothered me, and then slowly getting sucked into naively thinking that I might be able to tackle that problem and come up with a solution to it. So it was very much problem first and business second, rather than the other way around.
And where did you start? So you're sitting there, you and your wife, Sophia?
Yes.
So you're sitting there, you've obviously identified the problem, like you say, deep dived into it. What happened next? If you're not an entrepreneur, where did you start? Did you start by talking to people?
I started naively with some spreadsheets.
Okay.
So I started by taking a lot of data, trawling through, the ONS data online to make sure that I understood the details of the housing crisis, not just the high level impressions of what's written in the media, but the actual statistics. How many people have been displaced from home ownership over the last 20 years? How bad has the problem become in terms of affordability? And crunching those numbers. And then I started building some financial models that took an idea that I had about how it might be possible as a mortgage lender to make affordability go further, and modeling up different scenarios. So it was a very, very naive approach to building a business to start with. It was, I've got an idea that is really very financial and technical in nature.
Yes.
It was really looking at, can we assess customer eligibility, so first time buyer eligibility for a mortgage, differently from the way that other banks and building societies do. And having proven that on paper, so to speak, or in Excel, we then started building a product backwards from that. So we're going, right, we do think that we have a way to lend more, or to help people who have a smaller deposit, or help types of customers who aren't being helped by incumbent lenders. And then we worked backwards towards what would this look like as a product, as a proposition.
Yeah.
And the initial idea was quite mad. The initial idea was a little bit far removed from where we are today. It was, we were really focused on whether we could help friends buy a home together. So we were trying to change the way that people thought about getting onto the property ladder.
Yeah.
So the initial idea actually came in our garden. Okay. We were renting a flat. It was a top floor flat in a maisonette.
Right.
So one flat in the top of the house, another flat downstairs, and our neighbours downstairs had just moved out.
Okay.
So it was vacant downstairs, and it was put up for sale by the landlord. And we were this was the summer of 2018. We were having a barbecue in our garden with a bunch of friends, and we all thought, this is idyllic. And wouldn't it be nice if, as a group of friends, we could all live together? Like different flats, we'll stay upstairs, but do you guys want to live downstairs? Rather than us have some neighbours in that we don't know. Mm-hmm. We're really enjoying having this to ourselves, but we can't afford to buy it. So we looked at whether we could team up as friends and take out a mortgage together to buy the downstairs flat. So our friends would live in it, we'd continue to rent upstairs, and then maybe in the long run, we'd be able to afford to buy the upstairs flat as well. So we started looking around to find whether there were any lenders who would lend to us. Yeah. And we very quickly discovered that the mortgage system in the UK is just incredibly inflexible. Yeah. We were unable to find any lenders that would accommodate us as a group of friends. We were too many applicants, and the fact that we weren't all married to one another meant that we didn't qualify for going on to the same application. And so the initial idea was, can we build a lender that would let friends team up to get a mortgage, and as a result get onto the property ladder years before they'd be able to do it as a sole applicant or as a couple. And I'm sure you can immediately think, like, there are a lot of problems associated with potentially buying a property and taking that financial commitment with friends. And so the business we started designing was aiming to solve all of those problems for you. How do you take care of the legal ownership of the property divided amongst multiple different friends? Yeah. How do you ensure that if you're paying more to the mortgage than your mate is, you get a bigger share of the equity over time? So it was really this kind of co-ownership model that we began with and tried to bring to market.
And did you manage to bring that to market?
So we did. Over time, we managed to convince enough people that our crazy scheme would have demand and that we'd be able to deliver it and fund it. We've helped lots and lots of friends into home ownership since then.
That's amazing.
But before we launched, we realized that we're taking on a lot of problems here. Yeah. Building a mortgage lender from scratch is really hard at the best of times. And changing human behavior is one additional complexity that we probably shouldn't be trying to build into like the minimum viable product, right? The MVP up front. Maybe we should try to find established home buyer behaviors that what we have been building will cater to. So what we did was we went, you know what? We've got this idea about friends buying together, and that's probably because we're a bit odd. But there are at the time, the data was suggesting that about 60% of first-time buyers were getting help from family or friends when they were getting onto the property ladder. So co-buying was already happening in a massive way. It was just happening using different ways and means. So the grey economy of bank of mum and dad helping with your deposit, or similar solutions. So we thought, why don't we take the solutions we've been designing for friends and apply them to family? Why can't we deliver a better way for bank of mum and dad to help their kids onto the property ladder? And if we can do that, then we should help more people access home ownership, because we can give greater support and security to families who want to help their kids, but might not have the luxury of just gifting a deposit, right? You know, the standard model is mum and dad have money and make an enormous financial sacrifice to just give it to their kid. Yes. Here's 20 grand, you're welcome. Yeah. And maybe that's fine if your parents have a lot of money, But if that's a very large part of their savings, if that's money they're going to need in their retirement, there are no protections that exist to help them provide that helping hand, but still look after their own personal financial interests.
Yeah.
And so we designed products that would do that. So we came up with a product called our Deposit Booster, which gives family or friends the ability to co-invest into your property instead of gifting you the deposit. So instead of being mum or dad and going, here's 20 grand, off you go, they could take a £20,000 stake in your property. So it's still theirs. That bit is legally theirs. And they have a legal claim to get it back in the future. And we as Gen H provide the contracts and the legal structure to manage that. And then that gives them the reassurance that when they need that money back in the long term, or if their child's relationship breaks down and there's a legal dispute over the ownership of the property, they've protected that money, they've ring-fenced it. So that's the kind of way that we came to market, was going, let's solve the problems, focus on the problems that people are already facing today. And then over time, we will try to emphasize that point around helping friends as well, and just basically any buyer configuration. Whatever way you want to get on the property ladder, we're going to be the lender that is there with solutions for you.
And do you feel that you've achieved that? Have any of your friends used Gen H for a mortgage?
They have.
Which is super exciting.
Which is very nice. So actually the first customer that Gen H has was my closest friend.
No way.
And we used our Deposit Boost.
Oh, amazing.
So yeah, it helps to have some mates who want to try out your product when you're getting started. And to use a technical term, the service was extremely janky at the time. So we needed people who were forgiving and willing to work with us through all of the issues of getting up and running. One of the biggest challenges of building a business like this is you can't just spin up a version of the product quickly and see if it works.
No.
You've got to get regulated. You've got to raise all the capital, all these things. So we found a friend who was willing to go through this with us, helped him as well. And I ended up providing most of their deposit for them. So it was a couple buying together, very good friends of ours, and Sophia, my wife, and I took all of our savings that we had and put it into their deposit. But we did it with this Deposit Boost structure where we continued to have a legal claim to it. And then it worked out precisely as the product is intended to. So 2 years later, at the end of their 2-year fixed rate mortgage, they were able to afford not only their own home without our support, but they were able to upsize to a different home. And they were able to benefit in the meantime from having become homeowners early. House prices increased quite a bit while they were homeowners. So their equity more than doubled. And they were then able to use that housing wealth that they had to trade up when they had a kid. And we got our money back. So yeah, that was the first example of friends helping each other out.
How did that feel for you?
Oh, it was great. There's a ridiculous photo of me and my mate standing outside the sold sign outside his house when I went to see it for the first time. It was an incredibly exciting moment. And we then gradually went from helping friends and then friends of friends through to those first customers who heard about us on Instagram.
Wow.
We were putting out the message on Instagram. I personally was taking calls with every customer who had interest. So I could still list off the names of our first 20, 30, 40 customers because I was personally holding their hand and working with them and their families through that process of getting their first home. And some of them were amazing. They were waiting. This was before we were authorized by the FCA. So we didn't yet have our regulatory permissions. We were being very transparent about this. We were going, we are not yet live. We're building a waiting list. This is what we're aiming to do. And so when we did finally get our regulatory permissions through, we had this list of customers who'd all been biding their time, waiting. We'd already assessed them. So we confirmed that subject to us getting our regulatory authorizations, we'd be able to help them. And so when we knew we were close, they started looking for properties. And again, some of them we were getting into their homes just before they had their first children and so on. It was really, really exciting.
That is. So what year was this? How long did that take?
That was in those first customers moving into their homes happened in December 2020, January 2021.
So it took a few years.
Yeah. So we started thinking about the idea in the summer of 2018.
Yeah.
We took the plunge in February of 2019. So that was when we left our jobs.
Yeah.
We went all in. And then we set up payroll. We got our first paychecks. We had our first employee on the books in June of 2019. It then took us until September 2020 to get our regulatory permissions from the FCA.
Yeah.
And to have the funding to give out our first loans. So yeah, that was then September the 15th, 2020. We got the reg permissions, had a big party, and did our first advice session, our first advice meeting with our first customers in the office.
Amazing.
So they joined us for the launch party.
That is quite something. You say it because you've lived it. You probably don't realise how extraordinary that story is. For people out there that have saved a deposit to take that risk, to actually put it into a business, help your friends at the same time.
Yeah, well, I use that same chunk of money I use well because I used that to set up the company to start with. So I'd taken all of our savings. And by the time that we raised capital from outside investors, I was overdrawn on my current account. So we'd taken it right down to the wire in terms of putting every penny that we had into the costs of setting up the business, which unfortunately mostly related to paying lawyers and consultants to help us get our regulatory permissions.
Right.
So it cost a huge amount of money to go through the process of becoming FCA authorized. But then when we raised capital, I got the money back. It was technically a loan from me to the business. And as soon as we got outside investors, the company repaid the loan to me. And then I gave that money to my friend to buy their house.
Yeah.
Yeah. So we were able to redeploy it well.
Yeah. You used it well. So was there ever a moment within all of that, or moments where you thought, what the hell am I doing? Am I doing the right thing?
Just every night. Am I allowed to use bad language on this? You
can use bad language.
I was absolutely terrified all the time. And I would, this is probably too much detail about my nighttime schedule, but if I go to the loo in the night, maybe 3 a.m., wake up, need to go to the loo, I would just be, that was my moment of vulnerability when I would just shit the bed. I'd just be up at 3 o'clock going, what the fuck am I doing?
Yeah.
This is potentially insane. There were so many good reasons that this would not work.
Yeah.
I mean, just so many. It was, the night terrors continued maybe for the first 2 years. They slowly came down in intensity, but it was probably 2 years in before I stopped feeling that. This kind of bullishness in the day and then just terror at night.
Yeah, that's interesting. Did Sophia have the same?
Yes, absolutely. I think it was slightly different. She was terrified for more of the daytime.
Okay, so you switched.
Soph's got lower risk appetite than me. Fundamentally, I've got really unusually high risk appetite in a way that's an absolute nightmare for her.
Yeah.
She's been amazing as a co-founder, and just has played an enormous role in building the business with me. But I think she'd be the first to say that she would never have done it if I hadn't dragged us into it.
Yeah.
So she's very, very brave in going along with me, whereas I'm a bit more mad in kind of charging ahead without feeling the risk quite as much.
So you said at the beginning of this interview that you don't see yourself as an entrepreneur, but to me, I hear entrepreneur. That is an entrepreneur that's willing to take a risk, that it consumes them. It's that it keeps them up, but they still charge on. That to me is an entrepreneur.
I agree that I probably fit the dictionary definition now, yeah. And I think it's very likely that I want to create other businesses in the future, which again falls quite squarely into the box of entrepreneur. But I don't want to create a business for the sake of creating a business. I will only do it where there's a problem that I really care about, that I want to solve.
Yes.
And I become very monomaniacal about things. I get obsessed with one thing. Again, hugely irritating to Sophia. I get blinkers on.
Yeah.
And I really struggle to lift my head up and pay attention to anything else. So it would be quite a bad bet to place to say that I won't find something else in the future that I similarly become obsessed with and want to try and solve. And I think without that, you're unlikely to do anything as stupid as starting a mortgage lender. And so it's certainly an advantage if you want to do exciting things, but it's also a significant disadvantage if you want to have a stable life and a good pension.
A nice peaceful existence. So what was the biggest challenge in that time? What from the beginning to now, what would you say stands out to you as your biggest challenge in that time? Other than the night terrors.
Other than the night terrors. I think the very boring answer in terms of just what is the biggest challenge in building a mortgage lender from scratch, going like, I'm a random person off the street. I want to build this business. How do I go about getting access to the hundreds of millions or billions of pounds that I need in order to give to customers? Is funding. It's how do you build trust with the people who have that capital, who have that money? How do you do it without having a track record? Your company is new, so you've got no record to say, I know how to lend.
Yeah.
I can do it responsibly. I can deliver you good returns, and everyone's not going to default on their mortgages. So how do you get that trust? And how do you even break down the doors to find the right people?
Exactly.
Like, who has money? Lots of people have money. Who wants to put it into mortgages?
Yeah.
Maybe start with the big six banks, the high street guys, a Barclays or a Lloyds or something. But then, who do you go and find in there? How do you find the right people to talk to and the people that have a mandate to do that kind of thing with you? And once you found them, the process of trying to convince them to do something that they've never done before, that was your idea that you came to them with, rather than something they were looking to do, and sell them on that, is just incredibly hard, and it remains the key day-to-day challenge in scaling Gen H. It's we've gone from having a single funder to having lots and lots of funding partners who we work with now, who give us money to lend. And I should say, that's in place of what a bank would do, which is get deposits from a customer.
Yes.
Right? So our business model is not to offer savings products and current accounts to customers and use that money to lend out. We wanted to focus entirely on the problem of tackling home ownership and let people who are good at banking and managing deposits do their own thing. So the way that we work is they provide us with funding lines, and we use that money to lend out to our customers. And that trust building and convincing them that you have a compelling reason for them to go and change their business model is enormously hard. Now, that's, as I said, what's the hard thing from a business model perspective? If you're thinking just what was the hardest thing that we had to go through, what was the biggest challenge as individuals,
as a person,
in building the business, I think I'd probably have to go with when lockdown happened.
Okay.
So we were started as a company. We hadn't started trading.
Yes.
So we existed. We had a team. We had some money in the bank from investors, and I had a term sheet for another funding round. With lots of money. It was on really good terms. We were very excited about it. And COVID happened. We got the term sheet about start of March. Lockdown happened, what was it, around about the 15th? It was sort of middle of the month. And the next day, the term sheet was pulled. So the investors who'd given it to us withdrew it. The market that we were planning to launch into, the housing market, as you'll remember, shut completely. So housing transactions stopped. Now, we weren't trading at the time, so it didn't directly hit us.
No,
but we were fundraising in a market where people were going, COVID's happened. We're going to not fund. Most investors were just, pulling back everything, right? So not deploying capital. The fact that our market was clearly not going to be a beneficiary of COVID anyway, meant that there was huge aversion to investing into the space. And so we went through this process of having to let a lot of people go early on. So we had to cut costs in order to get to grips with the fact that we no longer had this money coming into the bank. We had massive uncertainty about when we would be able to start trading. And similarly, not just the money that we used to pay the salaries and keep the lights on was going to run low. We also saw the deals that we had lined up to provide the mortgage funding also get pulled. So just the whole thing came crashing down within, a year of getting started and before we'd even been able to issue our first mortgage. So that was incredibly tough. And as a first-time founder, trying to build the courage to let people go. To that first time, it was really the first crunch moment where we had to make decisions that were in the best interest of the company and on aggregate in the best interest of the employees of the company. Because without making these decisions, there would be no future of the company and everybody would go. Having to make those first people redundant and make them redundant in an incredibly difficult environment was really tough. And I hadn't yet developed, I'm naturally conflict averse, and I found it incredibly challenging. We had to do it by video call as well, right? Because we were all locked down. So you couldn't even give people the time of day to go and sit down in person and go through it. But my main learning from that, it was the first time I saw this up close, was most people are phenomenally dignified if you treat them with respect. Like I can still remember each of those conversations and how big an impression the individuals who we were letting go made on me in the way that they responded.
Wow.
Just like, how much dignity they had, how much grace they had in going. And I hope what I took forward from that was, if you are honest with people and you treat them as grown-ups and you provide them with transparency around your decision-making, the vast majority of people will behave incredibly well, understand why you're taking the decisions you're doing, and accept it.
That's amazing. That is an amazing lesson, I think, that a lot of people probably do need to hear, because those tough decisions you can't prepare yourself for that. You can develop that muscle, but you can't prepare yourself for that.
I completely agree. So it's only through practice. And I envy anyone who has that kind of, I don't know if it's a good thing to feel comfortable in those conversations or not. I still never feel comfortable going into them.
No.
But I'm a hell of a lot better than I was when I had to do it for the first time.
Yeah.
And this is definitely a truism, but I've never ever regretted letting anyone go. Right? The only thing I've ever regretted is not doing it sooner.
Wow.
Not just for the business, but often for the individual as well.
Yeah.
Because you're often skirting, if you're not letting someone go early, you're often skirting around issues that are making their lives harder, the company's life harder. Yeah. And it's your responsibility to take the right decision.
Yeah.
And with a lot of these issues, it's better addressed up front and transparently. And again, amongst the biggest mistakes I've made have been not confronting performance issues early enough, letting them fester, and then having harder conversations later on because you didn't address them up front.
Yeah. Amazing. Thank you. So I want to talk about New Build. New Build Boost, isn't it? New Build. I need to say Broker Boost. New Build Boost.
Yes, very much New Build Boost, which is the new product we've launched in the past 8 weeks.
I really want to talk about this because this is your latest innovation as far as I can see. And I think it's a super exciting one. So you and I, we all know the government has said they're going to be building 1.5 million homes in the next 5 years. And I believe this product is going to really help people actually afford to live in those homes and actually afford a mortgage. So can you tell us, what is the New Build Boost product?
Absolutely. So we always talk about New Build Boost as a replacement for Help to Buy.
Yes.
Now, Help to Buy is something that most people in England and Wales are super familiar with. Clearly, it helped a vast number of people onto the property ladder between, 2013 and 2021 or so. We've seen that since it was removed from the market, it has created a massive gap for people who were previously getting onto the property ladder, who were no longer showing up in the data. We'll come on to, I'm very happy to talk about what some of the flaws were in Help to Buy and some of the negative effects it had on the market. But it had a very large number of positives, and there were unambiguously hundreds of thousands of people of a certain demographic, certain income level, pretty much your typical household, who were getting onto the property ladder courtesy of Help to Buy, and they've just dropped out of the numbers. And so we felt there was a real need to come up with a private sector solution that would fill the gap, that would help people who are both deposit and affordability constrained, meaning they don't have enough saved up to qualify for a mortgage with a lender. Yeah. But even if they do have enough saved up, if they've got their 5% or their 10% or whatever it is, the amount that the bank will lend them is actually still not enough to buy the property that they want. So in mortgage jargon, that's what we mean when we say affordability constrained rather than deposit constrained. So people who are both don't have enough deposit and also I can't borrow enough. Most people fall into that bucket.
They do.
So we designed a solution that takes some of what we consider to be the best aspects of Help to Buy and improves them and strips out some of the worst. So if you're a home buyer and you're looking at a new build property, and this is currently exclusively available through Persimmon Homes, one of the largest developers in the country, but we're looking to roll it out across any other home builders in the UK who want to participate. If a customer comes and wants to buy a home, Gen H will give them what is called an 80% loan to value mortgage, meaning the value of the mortgage that we give is equivalent to 80% of the value of the home. Typically, that would then mean you need a 20% deposit.
Yeah.
But instead, we also give you a 15% deposit boost. So in addition to giving you this 80% mortgage, we give you a 15% deposit boost. So we're funding 95% of the value of the home for you. And that 15% piece that we give you is interest-free for life. So what that means is the total amount that you're able to borrow is significantly more than you'd be able to get if you went to a bank or building society and got a regular high loan to value mortgage.
Yeah.
Now, that then extends affordability for a lot of people by tens of thousands of pounds. And for a lot of people, it will be the difference between not being able to buy and buying at all. For others, it'll be the difference between being able to buy a 1-bedroom house or a 2-bedroom house.
Yes.
So it's the first of its kind in that respect, is a lender that is providing both the mortgage and also deposit support. And I said that we've tried to shave off some of the rough edges of Help to Buy. And the fact that it's interest-free for life is a key point for us. It means there can be no affordability shock for you later on in the term. Help to Buy started to be interest-bearing after 5 years. So you'd have this grace period, and then you'd have to start paying extra. So we've got rid of that. And Help to Buy was what's called an equity loan as well, which means that the value of it, the amount that the government gave you, would increase or decrease in line with changes in your house price. So it's a bit like they've got a fractional stake in your property. Now, New Build Boost is the same. It's also an equity loan. So it can increase or decrease. So the amount that you owe can go up or down in line with changes in your house price. But we've frozen that for the first 5 years. Nice. So for the first 5 years, if you repay up until the end of the 5th year, you only ever pay back precisely what you borrowed. Yes. Which means that you don't have to share any upside with Gen H if your house price has gone up in value. So it creates an opportunity for people to pay it back at face value and own their home outright after 5 years.
I think it's brilliant. I was a huge fan of the Help to Buy scheme. I was very, very sad when it was over because I saw how many people it helped. And I saw as well how if we gave people the right advice, they could manage the Help to Buy loan and really take advantage of it. Because 5 years is a long time for people's income to increase or for their situation.
It's a very long time for the target audience that we're trying to help as well. If you're in somewhere between your early 20s and your mid 30s, which most first time buyers are, your income normally changes very significantly through that period of time. So the prospects of you being able to afford more further out are really good. And the value to you of having got onto the property ladder, not let house prices run away while you were trying to build up your savings, is hugely valuable.
Huge. So have we seen our first New Build Boost customer? I know it's only been 8 weeks. Have we got our first customer through the door and looking to complete on a new build property?
It's happening this week.
How exciting.
Which is incredibly fast.
That is very fast.
Normally it takes, just for a normal mortgage, buying a non-new build home, so an existing home, it would normally take 3 months to 4 months
Yeah.
from getting your mortgage offer through to completing on the property. For new builds, it's, as you know, often much longer than that, because developers will be selling properties before they're finished.
Yeah.
So to have a customer buying a new build property, moving in and collecting the keys within a few weeks of launching the product is really exciting for us.
It is. So tell us about those customers. What was their situation? How did they use the product? How did it help?
So we've seen some of these. It's always really fun when you get these products live in market, because you have all sorts of hypotheses about who it's going to help, how it's going to be used. But the reality always turns out slightly differently from how you expect. So we've been studying every single customer that's coming through. We have a team-wide channel where every single application is posted. And I've insisted that we do this up to a certain number of applications. So until we hit a certain threshold, the team has to write a message every single time we get a new build boost application, so that the whole company can see what's it look like, who are the customers that we're helping, and so on. So the first customer that we're putting into their home with our new build boost product, they're completing this week. So they're getting their keys and moving in this week, and they're exactly the type of family that we were hoping to help. Two individuals, a couple, husband and wife. They're on incomes of about £30,000. They've saved up a deposit that is worth 5% of the value of the property, but they can't get a bank or building society that will give them the mortgage that they need. They've got some commitments relating to childcare. They've got a kid. They've got some credit card debts that mean that the amount that they can borrow is a little bit lower than it might otherwise have been, and so they're just capping out on the total amount that they can afford. And that new build boost equity loan, that extra 15%. Just bridges the gap for them wonderfully, and allows them to buy now when otherwise it might be years before they could be in a position to purchase their first home.
Validation, that's all you need, isn't it? That proves the product works. I'm very excited to see where this goes, and I definitely want to push the product out there, so I'm going to be talking about it a lot.
I appreciate that.
So in one sentence, who is New Build Boost for? It's
for the average first-time buyer in the UK who's on typical income, and hasn't been able to save up enough of a deposit to get a standard mortgage with a bank or building society.
What advice would you give right now to a first-time buyer that you were once upon a time hoping to get on the property ladder?
Go and find a really good mortgage advisor, and if they don't give you a very good explanation of why you can't afford to buy a home, go and find another mortgage advisor, and do that until someone gives you a really good, thorough answer about what it will take. Because there are a lot of great advisors out there who can help you and can build a relationship with you over time to help you get ready to buy a home if you're not ready today, and who will give you the time of day to get you ready. There are also lots of mortgage advisors out there who are too busy to do that, and who won't give you the time of day, or who might see you as being a difficult case, and perhaps more trouble than it's worth for them to support. And so you might end up being told that there are no solutions when in fact there might be. So there are far too many customers in the market. When I say customers, I should really say aspiring first-time buyers, customers to mortgage brokers, who just get the wrong advisor, who doesn't have a good enough knowledge of all the options that are out there. And then they leave disheartened, having been told that they're not yet ready to buy, or perhaps told that they're so far away from being ready to buy that it's not even something that's on the horizon. And we're missing out on new homeowners as a result of that. So just persevere. And if one advisor tells you you're not ready, make sure at the very least they can give you a really good explanation.
I think that's fantastic advice. Fantastic advice. Okay, I think I could talk to you forever about this topic. We could go into so much more detail about business owner life. And I do want to finish with this because I know you've got a big change coming for yourself as a business owner. And I really want to dive into the reality. You know, you are a co-founder. You've built something special. It's clear how passionate you are. Comes across so effortlessly when you're talking about who you're doing this for and the people that it's helped. So what is next for you, Will?
Yeah. So I've very recently taken the decision to step away from Gen H as CEO.
Okay.
So having started the business with Sophia and having built it and poured my life into it over the last 6 years, I'm going to be stepping away in the coming months,
Okay.
and moving onto the board. So I'll still be involved with the business. I'll still be helping out, but I'm going to be handing over to my deputy to take over as CEO and run the company. And the reason I'm doing that is really because I'm exhausted.
Yeah, I was just going to say.
I'm not. I found that I'm not able to do things in half measure, and I've reached a point where I'm just mentally and physically exhausted in a way that I'm no longer able to do the job as well as I'd like to.
Yeah.
I can't put as much into it as I was able to a few years ago, and so I think it's best both for the company and for me to have somebody who is. So I'm making what's going to be a really both exciting and sort of terrifying transition, where I'm hoping that I can continue to support the business, but from a slightly greater distance, and watching the wonderful team that I've been lucky enough to build over these years take this further. And I'm very confident that they're going to be able to. The values and the mission that we have in the company are lived and breathed by everybody every day. So I don't think we're in a position anymore where the company needs me in order to be what it is. The team is there, and they will make sure that Gen H continues to go from strength to strength and always have our customers front and center.
Yeah. And with this extra space, what do you hope to fill it with?
I genuinely don't know. Okay. I genuinely don't know, because I think that having been so deep in this for quite some time, I need to step away and try and clear my head before thinking about what comes next. I want to solve interesting and important problems. So whatever form that takes, I'll definitely be jumping into some kind of problem solving mode as soon as I feel that I've got the energy back. But whether that's starting another company or joining somebody else's or going into a different walk of life entirely, I don't know yet.
I would love to keep the dialogue open, because I think this is something I don't think enough people talk about, that our identities as business owners can be really wrapped up in our creations, and it has to be to create something and birth it into something tangible. It has to be a blend, but at some point, whether it's a sale or in your case stepping away from the CEO role, you have to create that space again, and it's intuitively trusting that intuition to know when it's right to create the space too. And you'll be changed. You won't be the same Will that started this. You're an evolved version of yourself, all these lessons and muscles you've learned. So I would love to talk more about that and what that journey is like, because I think not enough people do.
Yeah, I'd love to. I couldn't agree more. It's building a business breaks you down and builds you up over and over again.
Yes.
And I definitely started this company with my self-worth and my identity fully woven up with the success of the business. And I felt every success and failure as deep within me, as a judgment of my worth. And it's for me, it's been a journey of appreciating that those are still two separate things, and that the company can exist and thrive without me, and that also my own value can be separate from that of the company.
Yeah. And that is the truth. That is the truth. So I'm sure you'll navigate so much in the next chapter that I can't wait to hear about. Thank you for reflecting on the chapter you've just written and the impact that you're having on the property market. As someone that's so passionate about this area of the UK, I am so deeply grateful on behalf of the industry, really, that there are people like you out there innovating, because there's people out there who need it. And it took for you to go through those sleepless nights for it to happen for people. So thank you.
Pleasure. There's a lot more to do.
Yes, there is. Thank you so much for coming on the podcast.
Thank you, Sarah.